which talks about the constitutional provisions for levying of and especially indirect tax. So the right to impose taxes in the constitution, so even the levying and collection of taxes is empowered by the Constitution of India. 5 Article 265, no tax shall be levied or collected except by the authority of law. Note, Article 265 applies only to tax and not fees. Article 14, the state shall not deny to any person equality before the law or equal protection of the laws within the territory of India. And 300A, no person shall be deprived of his property save by authority of law. So the definitions of taxes versus fees. Fees are the amounts paid for a privilege and are not an obligation, but the payment is voluntary. Fees are distinguished from taxes in that the chief purpose of a tax is to raise funds for the support of government or for a public purpose. There should be relationship between service and fee. 2, that the relationship is reasonable, cannot be established with mathematical exactitude in the sense that both sides must be equally balanced. In the course of rendering such services to the payers of the fee, if some other benefits accrue or arise to others, quid pro quo basis is not destroyed. The concept of quid pro quo should be judged in the context of the present days, a concept of market which are expected to render various services and provide various amenities, and these benefits cannot be divorced from the benefits accruing incidentally to the others. Number 4, a reasonable projection for the future years of practical scheme is permissible. And 5, services rendered must be to the users of those markets or to the subsequent users of those markets in as a class. Fee is not levied as a part of common burden, yet service and payment cannot exactly be balanced. The primary object and the essential purpose of the imposition must be looked into. So there was a case with regarding to that, Southern Pharmaceuticals and Chemicals Trichur and ORS in 81, and that was the case. Division of powers, I told you there is a central list, there is a state list, and there is a concurrent list. Central goes only to the central, state revenues goes only to the state, and concurrent is shared by both the central and the state. So how the powers are divided in terms of taxes? Article 246(1), notwithstanding any in clauses 2 and 3, Parliament has exclusive power to make laws with respect to any of the matters enumerated in list 1 in the 7th schedule in this constitution referred to as Union List. Number 2, notwithstanding anything in clause 3, Parliament and subject to clause 1, the legislature of any state also have power to make laws with respect to any of the matters enumerated in the list 3 in the 7th schedule, that is in this constitution referred to as the concurrent list. And finally 3, subject to clauses 1 and 2, the legislature of any state has exclusive power to make laws for such state or any part thereof with respect to any of the matters enumerated in list 2 in the 7th schedule. In this constitution referred to as the state list. So we have 3 important lists. The first list is the central list, the second is the concurrent list, and the third one is the state. Article 246 makes it clear that the exclusive powers conferred on the Parliament or the states to legislate on a particular matter includes the power to legislate with respect to that matter. Hence, where the entry describes an object of tax, all taxable events pertaining to object are within that field of legislation, unless the event is specifically provided for elsewhere under a different legislative head where there is the possibility of legislative overlaps. Courts have resolved the issue according to the settled principles of construction of entries into the legislative list. So this is the division of powers. So you have a central list, which is called the union list, the concurrent list, and the state. Residuary powers. Article 248(1), Parliament has exclusive power to make any law with respect to any matter not enumerated in the concurrent list or the state. So the central government, as Parliament, has all the right to make any with respect to the union list. Such power shall include the power of making any law imposing a tax not mentioned in either of those lists. So they can introduce any tax which is not being mentioned in the concurrent or the state. 97. Any other matter not enumerated in list 2 or list 3, including any tax not mentioned in either of those lists. No overlap should happen between the union and the state list. A scrutiny of list 1 and 2 of the 7th schedule would show that there is no overlapping anywhere in the taxing power, and the constitution gives independent sources of taxation to the union and the state. Following the scheme of the Government of India Act 1935, the constitution has made the taxing power of the union and the states mutually exclusive, and thus avoided the difficulties which have risen in some other federal constitution from overlapping powers of no taxation powers are in the concurrent list. So here the taxation powers are given in the state as well as the union list. So no such powers are being given in the concurrent list. Limit of professional tax. I think you would have studied professional tax under section 16 subsection 3 in income tax. You can see that there is a professional tax. 276, notwithstanding anything in article 246, no law of the legislature of a state relating to taxes for the benefit of the state or of a municipality, district, board, local board, or other local authority therein in respect of professions, trades, callings, or employment shall be invalid on the ground that it relates to the tax on income. So this is our taxes on the income. Therefore, there is no professional tax on indirect taxes. The total amount payable in respect of any one person to the state or to any one municipality, district board, local board, or other local authority in the state by way of taxes on professions, trades, callings, and employment shall not exceed 2,500 rupees per annum. So that's why 2,400 rupees is being collected in the form of professional taxes, that is 200 rupees per union list items of indirect tax. Number 1. Number 22, railways. So you can collect taxes on railways. Highways declared by or under law made by Parliament to be a national highway. Interstate trade and commerce. So you can see even when GST is introduced, you have IGST, SGST, and CGST. Central, state, and integrated GST. That is the concurrent. Duties of customs, including export duties, duties of excise on tobacco and other goods manufactured or produced in India, except alcoholic liquors for human consumption, opium, Indian hemp, and other narcotic drugs and narcotics, but including medicinal and toilet preparations containing alcohol or any substance including in subparagraph B of this entry, and also 85, corporation tax. So all these things are there in the union list. It is continued. 86, taxes on the capital value of the assets exclusive of agriculture land of individuals and companies, taxes on the capital of companies, estate duties in respect of property other than agriculture land, duties in respect of succession to property other than agriculture land, terminal taxes on goods or passengers carried by railway, sea or air, taxes on railway fares and freight, rates of stamp duty in respect of bills of exchange, promissory notes, bills of lading, letter of credit, policies of insurance, transfer of shares, debentures, proxies and receipts. So it is the list. Again, continuation of the union list. Taxes on the sale or purchase of newspapers and on advertisement published therein. Taxes on sale or purchase of goods other than newspapers where such sale or purchase takes place in the course of interstate trade or commerce. 92B, taxes on consignment of goods. Whether the consignment is to the person making it or to any other person, where such consignment takes place in the course of interstate trade. Or 92C, taxes on services. 96, fees in respect of any of the matters in this list, but not including fees taken into any. These are the state list items of indirect tax. Intoxicating liquors, that is to say, the production, manufacture, possession, transport, purchase, and sale of intoxicating liquors. Communications, that is to say, roads, bridges, ferries, and other means of communication, not specified in list 1. Municipal tramways, ropeways, inland waterways, subject to the provisions of list 1 and list 3 with regard to such waterways. vehicles other than mechanically propelled vehicles. Water, that is to say, water supplies, irrigation and canals, drainage and embankments, water storage and water power subject to provisions of entry 56 of the list. Land, that is to say, right in or over land, land tenure, including the relation of landlord and tenant and the collection of rents, transfer and alienation of agriculture land, land improvement and agriculture loans and colonization. And finally, betting and again continuation of the state list. Taxes on lands and buildings. So, the Property Land, the Land Revenue Act. Taxes on mineral rights, subject to any limitations imposed by Parliament law relating to mineral development. Duties of excise on the following goods manufactured or produced in the state, and CVD, countervailing duties at the same or other rates. Similar goods manufactured or produced elsewhere in India, alcoholic liquors for human consumption, opium, Indian hemp, and other narcotic drugs and narcotics, but not including medicinal and toilet preparations containing alcohol or any substance included in subparagraph B. Continued again, state list. Taxes on entry of goods into a local area for consumption, use or sale therein. Taxes on consumption of sale of electricity. I just gave you an example of KAB or BESCOM. Taxes on sale or purchase of goods other than newspapers, subject to provisions of entry 92A. Or taxes on advertisements other than advertisements published in the newspapers and advertisement broadcast by radio or television. Taxes on goods and passengers carried by road or on inland. Then still continuation. Taxes on vehicles, whether mechanically propelled or not, suitable for use on roads, including tram cars, subject to the provision of entry 35 of list. Tax on animals and boats, tolls, taxes on professions, trades, callings and employment, capitation taxes, taxes on luxuries, including taxes on entertainment, amusement, and betting and gambling, rates of stamp duty in respect of documents other than those specified in provisions of list 1 with regard to rates of stamp duty. So all these are state related and state land revenues. Now, entertainment tax on value added services. This is your taxes whenever you pay, whenever you go to a mall or any of the theme parks or any of the movie theaters. Value added services provided as a part of mobile telephone service are exclusively covered by entry 31 of the list 1 union list of 7 schedule. Taxation of services is under exclusive power of the union list of India under entry 97 of the list 1 union list of the 7th schedule of the Constitution. I told you in 1994 it was a part of the Finance Act, then later it was included in the union list or the entry 97 of the list 1 of union list, the 7th schedule of the Constitution. Value-added services provided as a part of mobile telephone services are exclusively covered by entry 31 of the list 1 union list of the 7th. Taxation of services is under exclusive power of the Union of India under entry 97 of the list 1 union list of 7th schedule of the Constitution. There can be no justification for treating them under entry 62 of the list 2 state list of 7th schedule. Taxes on luxuries, including taxes on entertainments, amusement, betting, and gambling. So, concluding remarks, never assume that just because a tax is imposed by the parliament, state legislature, or municipal body, it is constitutionally valid. Governments have an ever-increasing appetite, so they keep thinking of innovative ways to remove money from common man's pocket. In their enthusiasm, they often make mistakes. Constitution of India has many safeguards to limit the power of the various governments with regarding to imposition of taxes. It is the duty of chartered accountants, tax professionals, advocates, and vigilant citizens to keep check on the governments.